They tell you the economy is stable. They tell you the system is sound. But what if everything you've been taught about how money works, about who controls the levers of power, is a meticulously crafted illusion? What if the real crisis isn't just inflation or debt or job instability, but a gaping hidden wound at the very heart of global finance? A wound so profound it threatens to swallow us all. We're talking about 32 trillion missing, unaccounted for. Not just a typo, not just a rounding error, but a black hole where accountability and transparency simply cease to exist. They call them hidden books. I call them the architecture of our financial enslavement. Where are you watching from? Drop it in the comments. And if you want the unfiltered truth, hit that subscribe button, because today we rip back the curtain on the deepest, darkest secret of the Federal Reserve. Let's rewind. Ancient Rome, the mighty empire built on conquest and wealth, eventually crumbled, not just from barbarian hordes, but from within. From economic mismanagement, currency debasement, and a ruling class that increasingly enriched itself while the common citizen struggled under the weight of debt and taxes. The silver content in their denarius coins started shrinking. Less silver, same face value. More coins, less real worth. Sound familiar? This wasn't some sudden collapse, it was a slow, deliberate erosion of trust, an invisible theft that gradually sapped the empire's strength. Fast forward to the early 20th century in America, a booming industrial nation, yet plagued by recurrent financial panics, banks failing, depositors losing everything. The solution proposed? A central authority, the Federal Reserve. Established in 1913 ostensibly to stabilize the banking system, to act as a lender of last resort, to prevent those panics. Noble intentions, right? But the very secrecy surrounding its creation, the whispers of powerful bankers meeting in Jekyll Island, Georgia, plotting the future of American finance, it laid the groundwork for something far more complex, far more insidious than a simple safety net. They promised stability. They promised transparency. Yet decades later, we find ourselves watching our purchasing power evaporate, our national debt explode, and the very institutions meant to protect us appearing more opaque than ever. Sound familiar? The parallels are chilling. The denarius diluted, the dollar debased. Rome's patricians growing rich, today's financial elite accumulating unimaginable wealth. The illusion of control, while the actual power slips further into the shadows. We've replaced the direct debasement of currency with something far more sophisticated, far more difficult to trace, and far more devastating in its potential impact. Sound familiar? So, if the Federal Reserve was created to bring stability and transparency, how did we end up with $32 trillion unaccounted for? The answer lies not in simple accounting errors, but in a deliberate, system-altering mechanism that exploded in the late 20th century. A mechanism so complex, so vast, it became the perfect cloak for what I can only describe as the greatest financial shell game in history. This wasn't some accidental oversight. This was a calculated move, accelerated by a single, pivotal decision and championed by figures who understood the immense power of financial innovation without public scrutiny. We're talking about instruments designed to be invisible, to operate outside traditional banking regulations, to create money and risk on a scale that beggars belief. The mechanism? It's called derivatives. And its true power, its true danger, was unleashed by the rise of what we now call the shadow banking system. This wasn't a bank you walk into. It was a network of non-bank financial institutions, hedge funds, money market funds, and investment vehicles that began trading these derivatives, creating a parallel financial universe. The man who fundamentally changed the regulatory landscape, who effectively deregulated this monstrous mechanism, ensuring its unchecked growth, you won't believe his name, and the actual evidence is crazier than you think. Let's break down this beast. Derivatives. Imagine a casino, but instead of betting on cards, you're betting on the future price of cards, or crops, or interest rates, or the likelihood of a company defaulting on its debt. A derivative is a financial contract whose value is derived from an underlying asset or benchmark. On the surface, they sound harmless, risk management, hedging. But in the hands of unchecked greed, they become weapons of mass financial destruction. Think of it like this. You want to bet that the price of oil will go up. Instead of buying actual oil, you buy a contract that pays you if oil goes up. Someone else sells you that contract, betting it will go down. If you're right, you profit. If you're wrong, you lose. Simple, right? Now amplify that. Multiply it by millions, by billions, by quadrillions. Statistic 1. By the end of 2007, the notional value of all outstanding derivatives contracts globally was estimated at over 600 trillion. That's 10 times the size of the entire world's economy. It's an astronomical sum that exists largely outside traditional balance sheets. It's an ocean of phantom wealth and phantom risk. These derivatives allowed institutions to take massive, leveraged bets. And the beauty for the elite, the moral hazard, was this. When those bets went south, when the house of cards began to wobble, the too big to fail doctrine kicked in. The Federal Reserve, the central banks, would step in, pump trillions into the system, bail out the gamblers, and socialize the losses. This is parasitic finance at its purest. One of the most insidious types of derivatives? Credit default swaps, CDS. Imagine betting on your neighbor's house burning down. You don't own the house, you don't even live on the street, but you take out insurance on it. If it burns, you collect. This is what CDS allowed. You could bet against the solvency of a company or even an entire nation without ever owning their bonds. Statistic 2. Before the 2008 financial crisis, the market for credit default swaps alone had grown to over 62 trillion. These instruments amplified the subprime mortgage crisis, turning a housing problem into a global financial meltdown. They didn't cause the houses to burn, but they ensured that when they did, the fire spread uncontrollably, threatening to incinerate the entire financial system. And who regulated this? Almost no one. The shadow banking system grew precisely because it operated outside the strict capital requirements and oversight applied to traditional banks. Hedge funds, special purpose vehicles, even pension funds dabbling in these complex instruments, interconnected in a web of obligations and counterparty risks. An engineered destruction waiting to happen. Statistic 3. The total assets of the global shadow banking system were estimated at 63 trillion by 2011, growing by over 50% in just 5 years before the financial crisis. This massive parallel economy allowed unprecedented leverage, taking small amounts of capital and multiplying its speculative power by factors of 20, 30, even 50 times. When Lehman Brothers collapsed in 2008, it wasn't just a bank failure, it was the implosion of a key player in this shadow network, threatening to unravel the entire derivatives market. The dominoes began to fall. But then, the cavalry arrived. The Federal Reserve, through emergency measures, opened up liquidity swap lines, extended trillions in secret loans, and performed backroom deals to stabilize the system. Statistic 4. A Bloomberg investigation revealed that the Federal Reserve had secretly loaned $1.2 trillion to banks in a single day, December 5, 2008, through various emergency facilities. These were not public. These were not transparent. These were the hidden books beginning to manifest. A clandestine bailout of a shadow system that was never meant to be audited. This isn't about capitalism, this is about cronyism. It's about a casino where the house never loses, because when it gets into trouble, the public foots the bill. The illusion is that you have a choice. The reality is that your wealth, your future, is being leveraged in a game you don't even know you're playing. Statistic 5. According to the Congressional Government Accountability Office (GAO) audit, the Federal Reserve's total emergency lending programs during the 2008 crisis amounted to $16 trillion in cumulative loans to financial institutions, much of it kept secret from the public. And this is just what we know. The $32 trillion, that's the estimated potential exposure, the unfunded liabilities, the ultimate moral hazard embedded within this unregulated derivative swamp. The system is designed for exponential growth of risk, protected by the implicit guarantee of a central bank bailout. It fosters greed, encourages reckless behavior, and creates a class of financial alchemists who conjure wealth out of thin air, only to have the public pay the piper when their magic fails. The ancient Romans understood the dangers of debasing their currency, but they did it with metal. Today, we do it with digits, with complex contracts, with a shadow system that dwarfs the visible economy. The moral of the story isn't just about financial instruments, it's about the very nature of trust and what happens when that trust is systematically eroded by institutions built on borrowed time, on borrowed money, and on borrowed accountability. The stakes are higher now. Our financial systems are faster, more global, more interconnected than ever. The next collapse won't be a regional tremor, it will be a global earthquake, amplified by these very derivatives, ensuring that the destruction is instantaneous and catastrophic. Denial is not a strategy, it's an invitation to catastrophe. The Federal Reserve's hidden books aren't just missing numbers, they represent a permanent, systemic re-engineering of global finance through unregulated derivatives, ensuring that the true cost of every crisis is perpetually socialized, while the profits are privatized within a clandestine network that operates beyond any public audit or democratic oversight. It's time to demand answers, it's time to question the narrative. Share this video, spark the conversation, and subscribe for more unfiltered truth. Because the question isn't if the system will break, but when. And when it does, will we be ready? Are we wiser now, or walking the same path in better suits?